You put a note out, which I have to say one of the most top-read stories that we had last week, basically saying that you think the best is over for U.S. stocks.
No, Fred, yeah, I've been stating since the start of the year that my base case, until proven wrong, is that U.S. equities reached an all-time peak of MSCI or Country World Index on the Christmas Eve last year. So I think it's an all-time peak in U.S. dollar terms, just like Japan made an all-time peak as a percentage of world stock market capitalization at the end of 1989. But obviously I'm assuming part of that is a weakening dollar.
Right, but so is this on tariffs and some of the turmoil that we've seen, or this is just more of a structural effect of the way the indices work?
No, this is a structural thing because, frankly, the U.S. reached, I think, 67% of world market capitalization. This is extreme. Even if the U.S. economy is doing well, 50% would be a high weighting. And we had all this talk of American exceptionalism in the fourth quarter of last year, which was a sign of a massive top. We had S&P trading at an all-time peak of price to sales. The tariff noise is just an additional negative. So if Donald Trump really does go ahead with the tariffs, then clearly you should sell all these stocks today now. Now, there's still a chance that he backs off, but, you know, the simple point is that tariffs are very bad news for everybody.
Yeah, and I guess this just adds a layer of complexity, right, to try and understand where it goes. I mean, is U.S. exceptionalism now over?
No, I don't. I never believed in U.S. exceptionalism in a financial sense. There's one area the U.S. is completely exceptional in financial matters. That is the ability to print the reserve currency of the world. That is the true source of American exceptionalism in financial issues. But the irony is that the Donald Trump agenda actually threatens that huge privilege of the U.S., which is indeed to print the reserve currency of the world.
Yeah. But Chris, why are markets not really seeing what you're telling us? So there has been a correction, but actually, if you look, they've been pretty much flat since January.
No, we've had a big relief rally, and it's partly encouraged by growing hopes that Donald Trump's going to do a U-turn on the tariffs. Right. Which he's already done. He's already done significant U-turns. So clearly, if he announces today no tariffs, the markets can rally further. But it won't just be the U.S. rallying. China will rally and other markets will rally.
Right, but do you think even if tariffs are taken off or they're tempered somewhat, that actually there's permanent damage done to, what people see as the havens of the U.S.?
Yeah, because actually there's real catalyst to buy this year. There's a much better catalyst to buy Europe than there is to the U.S. because Europe's much cheaper, and we've had a very distinct positive catalyst, which is the German fiscal revolution, the revision of the debt brake, and Germany is going to kick in with fiscal expansion. So there's a catalyst in Europe you don't have in the U.S. The question in the U.S. is, do you avoid this negative catalyst of higher tariffs?
Yeah, so we did a chart, Chris, we're basically trying to encompass some of the earnings because we're in full earnings season, so they're coming left, right, and center. And we basically put them in three categories. The ones that, the U.S. companies that could be okay under the tariffs, the ones that really struggle, and the ones that haven't really said anything, so they can't quantify it. So we put, for example, UPS, Pfizer, and P&G in there. Do you look at sector to choose, or is it just regional?
Well, no, there's another issue. Let's say we suddenly hear there's going to be no tariffs. That'll be very bullish. But we still have then the issue of the massive amount of capex being spent on big techs, on the AI story. So personally, my view is that they're overspending on this AI story. Yeah. I think DeepSeek was a huge moment. And the message of DeepSeek is that so-called large language models are going to become commodities. So even if you take out the tariff story, I think there's an issue for big tech. And the market will probably start to refocus on that when we get this earnings season.
Okay. Chris, do you sell off some U.S. stocks at the moment to buy, for example, European stock, Japanese stock, and UK stocks?
Yeah, but I would be adding to China, Japan, Europe, and India. That's where global investors should be diversifying away from the U.S.
I mean, it's easier maybe for India to find new trade routes than Europe if they have to choose between China and the U.S.
No, India won't want to play both sides. There's no reason for India to make an enemy of either. But right now, Donald Trump needs to do some tariff deals outside of China. So that creates an opportunity for countries like Japan and India to negotiate a better deal with the U.S. than if there wasn't this pressure on the Trump administration.
As head of global equities, I'm sure you look at the Treasury market as well, because are Treasuries still a haven in the U.S.? And if not, how are they behaving?
No, I've been bearish on Treasuries since March 2020 when the Fed printed all that money because of the pandemic. So my view is that Treasury bonds have entered a long-term bear market, all G7 government bonds, and I've preferred since then local currency emerging market government bonds. I'd rather own long-term US corporate bonds than the Treasury bonds because US corporates have far superior balance sheets to the US federal government.
And how much should we worry about private credit?
And if there's a real US downturn, what blows up in America is private equity, private credit. But we need a real downturn. Without that downturn, you won't get the blow-up. So that's the question of whether we have a US recession. And I've got no strong opinion on that. But if we really have the tariff agenda implemented as stated, then clearly the risk of a US recession rises. And tariffs are a regressive tax hike on ordinary Americans.